Hello friends, welcome back. So today, the topic which we are going to discuss today is an important topic and it's relevant for this time. You would have been focusing on a lot of things happening in the market, volatility, budget, market is all-time high. Now what to do, which sectors to select or which companies to focus, how the future perspective of our country is and where the growth is there, right? So these are the multiple questions we'll be having. So this video is to give you a very clear understanding to focus and to target your or reduce the periphery so that you can narrow down where to look and what to look. So this video is going to help you in selecting your companies and going for a long-term investments. Hope you will like this video. And so this takes a lot of time to explore and create this kind of a videos. If you like this, do like this video and share it with your friends and family. So let's get into this video. This is Sundar and you are watching Mindful Finance. Okay, so what is the current status of our India perspective? How our India is doing? So we'll start with the introduction to understand the current position of our India, and then we'll drill down to the next stage. Let's get into that. So basically, our current economy is kind of a very good position now. I'll show you the data points, and there are few data points which might be confusing, difficult to analyze, but I'll give you the idea or give you the method to understand this one. I'll put my analogy so that it will be easy for you to also understand. See, the overall our Indian market, if you see, is focuses on financial indicators, lending rates, household debts, consumer spending. Right? These are the very key points because this is the base for the entire economy's growth, which is finance, consumer loans, and how the consumers are spending the money. Let's drill down further. So currently, if you see, the prime lending rate in India currently stands at 10.25%. So really a very high number compared to the past years. But this rate is, right, the current level suggests that we need to be very cautious. If you remember, in US, the 2008 crash, real estate crash, right? People start to buy homes without worrying about the debt, like how they are going to close the debt. The one side I'll explain later, but this is a very cautious place to focus because our country is going towards more of a debt nowadays. So our culture used to be kind of a savings based, and we always try to be cautious mode always, right? If you see the past history, everybody felt or everybody were uncomfortable to invest in stocks. The reason was to take risk if anything goes wrong, because everybody in those time felt that whoever invests in the market, end of the day they go bankrupt. So this was our mindset earlier, and we focused more on accumulating gold, real estates, properties. This was our earliest stage of Indian mindset, right? Now we are shifting towards that one. Since our mindset was risk averse or cautious about taking risk, so our market was kind of stable. Now it's getting volatile because this pattern is trying to change. So let's get into the details. So current status, if you see, the gasoline prices are reducing. So this is a very good sign, right? So it's been a very long time. Crude oil prices was high. Now it's slowly reducing or matching to the current situation, like 1.13 USD per liter, right? Almost like 100 rupees, 102 rupees is going on the market, which is a 20% price decrease from the previous high. So what will happen is this will reduce the transportation cost, so which will help you in the logistic business, and also 5% increase in energy industry margins. So when the margin is increasing, we checked the earlier video, right? After how to analyze a company based on the profit margins. So when the margin increases, obviously the net profit will increase, and the growth will be increasing the energy sector because their volume going to be increasing and the margin also going to be a good side. So that way, the energy is going to guide the entire sectors, all over sectors which are rely on energies is going to pick up. Let's look into India household debt to GDP. We discussed earlier also, right? Like how our debt is been increasing. If you see, household debt is increasing year on year. Almost now it is 41.7 USD. It was 2020, but still it is actually increasing. If you see, it has reached 40% of GDP in 2019, and still it's growing. So what it shows is consumers are the buying rate is increasing. The problem with this, while this can be very good in the short term time, because everybody, if you see Amazon, everybody is buying for EMI, right? iPhone, whatever goods, everybody is buying, so that way the volume or the sales will increase for all the consumer goods. So in the short term it will be good, but when the person get into the more of debt, the repayment of debt is a key point. So that is a very important thing we have to look. That is where the 2008 bubble happened. People were not able to pay their loan, inflation skyrocketed. Those things are very important. But the one important point is Indian mindset. Okay, till now, but not sure about the future, but till now, Indian mindset is repaying a loan is a prestigious thing. They'll do anything to repay the loan. You would have seen people suicide because now they are not able to repay their loan. So that much it's personally, right? So they'll start to get a kind of a peer process, a social process, that if they don't pay the loan, so they'll get into embarrassing situations. So they make sure they repay the loan in a proper way, in a proper time. So this is the Indian mindset. So till now it is the scenario. Not sure the future what is going to happen, but till this mindset is there, the repayment would not be a big problem for India. So currently, if you see, the household debt to GDP is 75.3%. It's too much, right? What do you mean by 75.3% of debt to GDP ratio means? This is what I'm telling. Even though the debt is more, the repayment, so borrowing is more, the repayment schedule is always been in a proper way. So Indian mindset, or Indians are always very focused in repaying the loan. So this will help in bouncing back to or regain the momentum of our market in the consumer side, consumer goods side. Okay, coming back to the consumer spending part. If you see at the current level, like at this point of time, there are certain areas where consumer spending has reduced. It's not a drastic reduction, but yeah, it is showing a reduction in consumer spending. The reason could be, as you would have already known, that every expensive things or luxury parts are sold a lot rather than not the middle class side, right? If we compare where the spending is going, more of the spendings are going towards luxury goods rather than important goods. Buying scooters, buying bikes, two-wheelers with a like 100cc bike or bicycle is reduced. Everybody now are able to buying Audi cars or BMW cars. So you are able to get the sense, right? So that is a problem. So this kind of situation is a very dangerous for the growth, because only one sector is growing, the other sector is not able to grow. So that the population wise, if you see, right, the one who are buying the luxury goods are percentage is very less. The other side is a big chunk of percentage people are there, they are not spending. So that is a dangerous part. Even if you hear the news about when Jio price was increased, people are trying to move to BSNL, even though they don't want to have high speed internet. So still they are going to go to a lower priced one. So this is our Indian mindset, or these are the mindset of people, or the large set of people living in India. So we need to be very cautious in that. So focus very careful on this kind of sectors. If we see, seen recently, Stockcraft is bouncing back. So and one more thing, so whatever I'm discussing, the stocks which I'm going to mention over here are not a recommendation. It's just a education purpose only. It's just for your education purpose. Okay, just don't try to go immediately and invest on those stocks. Previously, the one which we discussed, the debt part, the consumers. Now we are talking about consumer spending, right? So this all correlates, because the people are able to buy more loans. That means people will go into buying more goods. Even the lower end of the people now may get trapped or forced to buy luxury goods. But what will happen is there will be a shift from the pricing power, right? Pricing power will change. What will happen is ultimately the lower cost products also will change the price. So what will happen ultimately is, whoever trying to buy in luxury goods, they'll end up in buying the normal goods in a higher price, because luxury goods will again, the price may go higher than the current price. So they will feel it's like a framing effect ultimately, which one to buy. When they'll try to compare the price. Okay, iPhone is 1,80,000, and Xiaomi, for example, Redmi, all those phones are selling at say 12,000, and they will end up in increasing the price to 20,000 or 25,000. Now they won't think that the price has gone from 12,000 to 25,000. Rather than that, they will think iPhone is at 1,80,000. This is 25,000. So this is how the comparison works. And that is how the lower end sectors will try to hike their price, and their growth will increase. Indian consumer confidence. So this is the one. So it's keep on increasing, as I mentioned, right? Because of all this loans, debts, the cheaper loans. It's not, I won't say cheaper loans, but everybody is able to get loan or get EMI. So that mode is something creating a confidence from the consumer side that anybody can buy anything. There is no restrictions to buy anything. So that is the consumer confidence, which is keep on increasing in the recent times. So overall, based on the current scenario, you can basically focus financial services, energy and transport, and consumer goods are there, but you have to be very cautious in finding a good company over there. Okay. So as I mentioned, the growth of certain companies may shift to other set of companies, right? So like Hindustan Unilever, Nestle, they might be doing good in certain time because they have a good potential to increase their price. But there are companies which are not able to increase the price, or they're not able to cope up with the way the big brands are doing. So the shift may happen from them to the other companies. They may grow, right? So we'll discuss those things later point of time. But overall, so these are the two sectors, financial, because the loan rates are increasing. RBI is not planning to reduce any kind of rate cuts, interest rate cuts. But in the future, they may do that. But currently, they are not doing it. But still, the books are good for all the financial sectors. And assuming in the future, they may reduce they could reduce the rates. So in that case, more liquidity will flow. And as we discussed about the oil price, because of oil price, all the logistic business will boom. All the manufacturing sectors is going to have a bullish momentum. May not be in the shorter span, like not in another 1 or 2 months, but obviously the end of the year, this may start. So let's focus on the financial services. Now, as I discussed, people are going to buy more loans. Because of that, every banks are nowadays converting to a digital. Lot of digital transformation happening. You would have seen lot of banks like AU Bank, Bank of Baroda. They have launched the one credit card. So they just to attract the people, they are not using their own brand. So they are using a different brands like one. Bob card, they call it a Bob card, and Jupiter Banking, which is from Federal Bank. So they have a Jupiter Banking and they have their own card, right? So they are having a good branding, shifting to a new brand for their product and converting to a digital mode. So which is a good sign, or everybody is trying to be digitalized. And again, RBI is focusing on everything and make sure the regulatory setups are important, and every bank is trying to follow those things so that to reduce their non-performing assets. If the loan books are trying to increase the CASA ratio, right? So for that, RBI is trying to bring some policies. So that way, financial sectors are more focused and streamlined properly. So if you look at the investment opportunities, we can look at, as I mentioned, luxury, the people who buy luxury products and people who buy a normal product. The people who buy normal products may not be able to get a loan from very big banks. So there are small banks, small finances. So they will get a good opportunity to lend loans to these kind of customers. So their lending is going to be more than the already grown banks. Now let's discuss the energy and transport sectors. I keep on talking about this particular subject, which is sustainability. The future is going to be a sustainable based. Everything is going to be focused on sustainability or carbon neutral. Next step is carbon zero. So this is a concept. Carbon neutral is something that, for example, a company is running. Take an example of our EV batteries, bikes or car. It is getting charged, the batteries are getting charged from the electric. Where the electric power is generated, it might be generated by coal, right? So the coal is what is? It's a fossil fuel. Using a fossil fuel is not a goods, right? because that will emit more carbon. And on the top, if they use petrol or anything, again that will increase the more carbon footprint. So now what is happening is we are using coal, but ultimately the power consumed using the coal is converted or used by a battery based car. So this is something like negative positive. It is -1 +1. It becomes 0. So this is called carbon neutral. It is neutralizing it. Carbon 0 is the source itself generated from natural sources like wind turbine, hydroelectric power, solar. Right? Those are the source itself, green source. This is not from fossil fuel. And again, if this is used for battery-based car, there is no carbon at all in this entire process. So this is called carbon 0. Every company is focusing first for carbon neutral because there are a lot of companies still relies on fossil fuels, but their end goal is to convert into carbon 0. That is why the Saudi and the Middle East countries are trying to focus on different sectors because their oil production may stop and they have to change the way of living, or the revenue system has to be changed from oil to something else. So that is why they are making it to tourism-based countries. So that is a point you have to think. Okay, renewable energy is going to be the next big thing. So for all these energies and everything, we need logistics support. So for that, you need road, railways, airlines, ship, all those kind of a mode of transportation is very important. So for the logistic is going to be a very important sector in the future, which is unavoidable, right? Every consumer goods or everything has to be delivered to the end users. For that, obviously, you need logistic. So logistic is something like it's an evergreen industry, but logistic business needs some kind of a innovation idea. It does not need to be the same kind of ideas what we are currently having. Like if you look at Amazon, it's delivering through drone to avoid. So those are things like focused on renewable energies. They don't use bike or anything to deliver. So that way, the innovation has to be improved in India. So we have very, very, very good roadmap to cover all this kind of scenarios to satisfy the customers. So there is a good amount of potential to grow in this particular sector. So focus on those sectors. And coming back to consumer focused industries. So we discussed about consumer spending, how they are spending now. The second part is retail and hospitality. Hospitality is very important, right? Like Zomato is recently are trying to make profit because of their retail business and their hospitality business. And if you see Tata's Indian hotels, right? All those things are now picking up because the tourism is going to be a biggest churn because lot of vloggers are in the market right now to influence people to travel, and people are started to save money for travel. So those kind of mindsets are growing. So ultimately, this hospitality industry is going to be the futuristic one. Consumer products, obviously, the beauty products and everything in India is it's a very big hit. So that is another part to look into. The important thing is we discuss all those things. So make sure don't dump or plan any specific sector. Please try to be diverse based on the parameters. So based on the finance is always needed. A backbone of country is finance. So your portfolio has to have a significant percentage in finance. Consumer spending. India is growing the consumer spending, but I feel it is not going to be like the consumer spending going to continue for another 10 years. There will be some kind of a peak will happen and then it may hit. So you need to be very cautious about focusing on consumer spending based industries. Urban development. Again, the infra prices are rocking up. Our home loan interests are growing up. But urban development, the city development is very important where the central government or state government tries to improve their infrastructures. So by that, as we discussed earlier, this oil prices are going down. So you can find out for REITs. REITs are not good in India, but basically you have to think about infrastructure like L&T. So those kind of infra-based ones. But make sure do a thorough research. Okay, don't just get into that. Like Airtel, Indus Towers. Right? Those are very important things to focus. And the best thing is global opportunities. Don't just focus on Indian market. Similarly, focus for other countries where the similar patterns are coming up, where the consumer buyings are getting increasing, or just make sure to diversify your portfolio in different countries, not just in India. So I have done some kind of analysis for the financial sector, like top banking sectors to check which one is better for now. So based on the analysis, HDFC, ICICI, Axis. So these are I have done a little bit of analysis. If you see, overall, all banks are doing good. But if you see, HDFC is considered like potentially undervalued, and ICICI Bank is also doing good. Axis Bank are also looking at like a reasonably performing well with a good profit. Kotak Mahindra is valued higher currently, so just make sure. IndusInd also like undervalued signs. IDBI is a limited growth, but it's a fair value. Yes Bank is something like a risky one, so I don't recommend. But top picks are something like ICICI Bank and HDFC Bank. So these are the top picks. So from the banking side, these are the safer side to bet. Apart from that, if you want to go for the, if you want to explore more, check for Equitas Finance, IDFC First Bank, then Federal Bank, then Ujjivan Small Finance, AU Finance. So these are the banks you can focus for. As I mentioned earlier, for the lower income people to get benefited. So these are the banks which are giving more loans. But the problem is the NPA may be more in those kind of banks. But most of the banks are doing good. Just explore. The next sector is automobile. As I mentioned, all the EV sectors are coming up. The technology is going. The infrastructure is building up. So for that, you need, the next sector is to focus is automobile. In that, Tata Motors, Ashok Leyland, Tata Motors DVR, Electra Green Tech, Force Motors, Isuzu. These are the things I picked up. But in that, when I analyzed, the best picks are, I would say, Tata Motors, which I discussed long time back. Still, it's in valid in a very good price. And Isuzu is another one, which is a good one. So these are the two things I found compared to all other is doing good. And from the retail sector side, I did couple of analysis like Avenue Supermarket Smarts, which is a D-Mart, Trend, Vedant Fashions, Red Tape. Red Tape is seems to be very attractive for me. Electronic Smart, MedPlus Health, Ethos Limited. In that, if, the best thing is Electronic Mart and Red Tape, they are undervalued and their growth seems to be very good. If you see the the Electronic Smart, they are assumed to be growing at the rate of 30.69. So their growth rate is good, their profit margin is good, the sales is good. So just explore this Electronic Smart because this is based out of Andhra and Telangana area. They are into electronics stores. They are booming like anything recently. Just check that because all Avani Supermart is a good, but the P is way high. Look at the P. Trent, Vedant. Look at the P. Way high. Media Plus is way high. So currently I feel Red Tape and Electronic Smart are good bet. So we discussed about the Indian market mindset and the sectors to focus and different types of stocks. Hope you got some idea about where to focus. Just do analysis on this kind of sectors. I have made videos about how to find the undervalued stocks. Please go and check those videos to find out which is a undervalued stock. Go to a particular sector, list out all the stocks in the sector and try to compare those stocks within the sectors based on the methods I taught you. I have shared Excel sheet, Google sheet also to find out the undervaluations, the valuations of the stock. Please go back and watch this video. This is the right time, guys, to focus and start your investing journey. If you are new to the investment, please start now immediately. Don't wait for anything. And if you are already investing, this is the right time to focus on adding more to your investments. If you are already invested in this kind of companies, or start focusing on this kind of companies. Hope you like this video. Thank you so much.